I know everyone's been looking forward to this conversation. Everyone knows PolySign. But for those that don't, it's a company that's building really transformative financial tech that provides institutional investors with blockchain-enabled infrastructure in support of digital assets across the capital markets and payment sectors. This is the kind of tech that will accelerate the transition from traditional finance to decentralized finance. This is a movement which we've been discussing for the last 2 days. Custody is immensely important. It's the foundation and the glue that underpins the management and safekeeping of digital assets. So we're really lucky to have Jack McDonald, the CEO of PolySign, speak with us today. Little background. Previously, he was at Conifer Financial Services for a decade, where he grew assets under management from 5 billion to 125 billion, culminating in an exit in 2016. Before that, he was head of West Coast Equities at UBS. Welcome, Jack. Rhett Powers, welcome back. For those that were here yesterday, you'll all know Rhett. He is both a journalist and an entrepreneur. He successfully co-founded, built, grew, and exited from a toy company called Wild Creations. He now runs a company called Courageous Leadership. He is an author, leader, entrepreneur, and a regular contributor to Forbes. Hi, Rhett, over to you.
Hello, everyone. Hey, Jack.
Hi.
Good to see you again, man.
Likewise.
So I do want to start with, I mean, you've had so many amazing things happening at PolySign the last few months. Can you give us kind of a breakdown of what you've got so much going on? I'd love to hear and just get an update on the company and where you guys are and what's happening.
Sure. Well, thanks for having me. I really enjoy these opportunities to tell our story. We have 3 businesses at PolySign. One of them is standard custody, which is germane, I think, to this conversation, and it's particularly topical in all that's gone on with FTX. And so I'm spending a lot of time over the last couple of weeks, more than ever, talking about custody, the industry, et cetera. We also, 4 or 5 months ago, bought the leading fund administrator for digital assets, MG Stover. They've been around since 2015. Really built a name for themselves supporting digital asset and crypto managers for both liquid and illiquid, have a marquee list of clients who use us for those services, and really excited to leverage that client base, bring other products and services to them, and learn from them, and have them have an input into the products that we're building, the direction of the firm, et cetera. We have a third product that's kind of in the skunk works, if you will, called Atomic Net, which is a cross-chain settlement network that we're building, providing instant atomic settlement between different asset classes. Could be digital, could be analog. And in short, if you think about trading cryptocurrency for a US dollar, for a fractional interest in a real estate building, the Empire State Building gets fractionalized and sold, or tokenized interests in the KKR fund, all those different assets can trade within an ecosystem, but there's nothing really stitching them together. And so we're building a product for that, leveraging the blockchain expertise that we have. And that's a really exciting initiative, particularly because of all the concern around cryptocurrencies right now. Some people are saying, I'm not so sure about Bitcoin and the future of crypto, but this future tokenization and digitization that leverages the same foundational technology is really, really interesting. And so feels like we've got a little something for everyone.
Yeah, it does. How are you blending all that together in one organization? I'm kind of fascinated with when you're buying companies like that and you're trying to integrate cultures and products. How is that going?
Yeah, it's a challenge. You know, I think the cultural aspect of it is the most challenging. I should say it's the most important to get right, because someone far smarter than I once said, you know, culture trumps strategy, you know, all day long. And fortunately, and part of the attraction to the MG Stover business and the business that Matt Stover founded was to have a very core focus on client service, number one, and a core focus on building a real camaraderie amongst the team. We had a similar approach at Standard Custody, and so a very symbiotic sort of coming together of those two businesses, which has been great. And I'm very proud of the culture that we have as a combined firm. And you know, we're learning to dance with one another, but that process has gone, I think, much smoother than you would typically see bringing 2 organizations together. And in many ways, it really feels like a merger of equals more than an acquisition. I do, from a business standpoint, very much subscribe to the philosophy that if you chase too many rabbits, they all get away. And so while it appears that those are three different businesses, they're very integrated strategically. If you think about the precursor to asset servicing that exists in the traditional finance world, so you can think about a BNY Mellon or a State Street or a Northern Trust, all of those organizations start with custody and then build a surround sound of other services on top of it, whether that's trading or collateral management, but fund administration is always there. And so if you look back at our earliest investor decks when we put the business together, there was always a view towards adding complementary services, either strategically through M&A or organically by building them. And so we think that there are a lot of synergies to be had between the custody and the fund administration business, and the settlement product, overlaps with them as well. So we have engineers, specifically to your question, who we have one engineering team, we have one CTO who supports the technological and engineering development work for all the businesses. Obviously, the back office functions around finance, HR, people, culture, et cetera, are all integrated. And then the service delivery teams is where there's a different approach.
Can you explain to me the settlement product again, and what who uses that? Where does that who does that benefit? Again,
So we're to be clear, we're not in production yet.
Okay.
But you can think about it. One analogy that I like, Arthur Brito, our founder, who co-founded Ripple 10 years ago, used this analogy that's really stuck in my head in describing it. I don't know how old you are, Rhett, but let's assume you and I are around the same age. And
I got enough.
I got a little of that too, and not sure about the listener audience, might be in some cases younger than us. But in the early days of the internet, if you were an AOL customer and I was a CompuServe customer, and Irina was a Yahoo customer, if you remember, we could not email one another.
No, you couldn't. Right.
I could only email a CompuServe customer. You could only email an AOL customer.
Totally remember that.
And something magical happened where there was a breakthrough in the technology that allowed the interoperability between those different internet service providers, where all of a sudden it didn't matter who hosted your domain name. We were able to punch through those walls and all of a sudden start emailing and exchanging information with everybody. So too does that exist today in the digital asset world, where you can go trade private shares, for example, at Forge, let's say, or other private markets, or NASDAQ private markets, where if you're a customer of that marketplace, you can buy and sell the respective assets. And then you can go over to a crypto exchange and buy and sell Bitcoin and Ethereum. And then you can go to a platform like Securitize that just announced that they are supporting holistically the tokenized interest in, I think KKR launched a fund there, and Hamilton Lane launched a fund there. So if you want to go, but you have to be a Securitize customer to buy and sell that. What we're trying to do is connect all of those different exchanges into one. We think about the transfer of wealth very broadly. Not only regionally, we want to be global, but from an asset class standpoint, really be able to support the democratization of finance by bringing all those different marketplaces together. And we have a very narrow but extremely important role to play there, which is to solve for the dilemma of who's going to go first. You're over at Forge trading pre-IPO companies, and I'm over at Securitize trading KKR funds. We don't know each other.
Right.
And so how are we going to solve that lack of trust for who goes first? I can say, Rhett, why don't you send me the shares in SpaceX, and then after I get them, then I'll send you the shares in the KKR fund. You say, actually, Jack, I have a better way. Why don't you send me the KKR shares first, then I'll send you the SpaceX. And so essentially what we're doing on this blockchain powered settlement layer is taking attestations or memorializations of what exists on my side and at your side. So you use, let's say, Carta as a cap table management company, and we're able to attest to the fact that you have 100 shares of SpaceX held in your name, unencumbered. The company has waived their ROFR, free and clear to trade, and we lock that. And then you come over to me over at Securitize and you do the same around my KKR. And when all of those preconditions are met, what we allow for is the instant, and atomic means a pass fail. So either both sides succeed or both sides fail. And then instantaneously, the shares have been delivered bilaterally. So I have your SpaceX, you have my KKR, and then Carta, in that example, will update their cap table over at SpaceX to show that Rhett owns 100 less shares and Jack owns 100 more, and so on. And so, and due to the very nature of blockchain, that's a highly secure, immutable record of that transaction, and importantly, of all those different preconditions that were met.
That's
It's a really exciting. It's
Yeah.
a big idea, and the more and more folks who talk about it, the more interested they are. In part because it, and I mentioned this earlier, helps to address some of the concerns around cryptocurrency. All these things get bundled together. I'm sure we'll end up talking about Sam Bankman-Fried and FTX, but from blockchain and crypto and Bitcoin and digital, it all feels like one big, heap of like topics, when in fact, if you parcel them out, they're actually very different.
Do you need the, I mean, how do you get cooperation from these other platforms to help pull this off, to make this work? Is that needed in this?
It's an excellent question. So it is definitely needed. And we have some guideposts, if you will, from the way Ripple had set up their business in the early days. They had the notion of a rule book where consortium members who founded it agreed to founding principles and rules of engagement. And to be a participant, and I think they called it RippleNet in the early days, one needed to sign a rule book to say that I'm going to live by these rules. Importantly, this is not something that PolySign is going to own and operate and manage in a centralized way. That's really a no-no in terms of the new way of thinking about market structure and whatnot. But it would be guided by a rule book in the same way there's a company, a Wall Street messaging company called Symphony that has, I want to say, hundreds, maybe even thousands of financial institutions that use this messaging service in the same way that Bloomberg works, but between banks. And the banks came together essentially in a room and created a rule book that everybody subscribes to. And then if somebody breaches a code or an issue, that has its own sort of remediation process that the counterparties would take up. And so in a similar vein, the idea for AtomicNet is to have a rule book that is written ultimately by a consortium of founding members, of which PolySign would be one, but we're not, we don't have the master pen on this.
Right. Is the recession or the looming recession changing your thinking in any of this? Is this going to change your strategy at all?
It changes the strategy, and from the standpoint that, I think you always need to be mindful of the market opportunity, the market forces that are out there, and what is pressuring the business model. So it's a big question. There's lots of thoughts racing through my head. I mean, economic environment impacts some of our fund administration clients, taking longer for them to raise funds, for example, just in this market.
Right.
It can be accelerating, for example, this AtomicNet product, because people are thinking a little bit more broadly and in a more borderless way about how the transfer of wealth can happen. So there are push and pulls, on the business in different ways. Within the financial services industry that we're obviously focused in, one of the big changes that we've seen over the last year, and certainly over the last 2 to 3 months in just higher volume, is greater calls for regulation. And so my ear is very much to the ground around how we will continue to evolve in a business that is heavily regulated on the trust company side.
Right.
We've got a good, playbook there in terms of we're being regulated by New York and do everything in a very compliant way. We've got money transmitter licenses. We're registered with FinCEN. We welcome more regulation. The question that you hinted at around AtomicNet is, but didn't specifically ask, is what's the regulatory landscape there? And for a global business there, it's a real huge, important question, because there is no global standard regulatory treatment for any capital markets, really. And so that's more of a situation of having to adapt to local jurisdictions and different requirements there.
That seems kind of like a nightmare.
It is, and I think it will evolve over time. It's not going to be something that happens quickly. So I don't want to ramble to an answer, but I mean, I think, we the looming recession, the macroeconomic forces at play have a direct impact on financial services, everywhere. And so it certainly impacts our business, some positive, some negative.
Understood. Understood. Okay, I guess we have to go there now about FTX, and I'm sure we've been talking about it all week, but and speaking of regulation, do you see that is how do you think that's going to change the industry, and how do you think government is going to react and or overreact if that's the case? What's going to happen? What's the sort of end result of FTX, and where does that leave things?
I think the smart money bet would be that the regulators will overreact first and then refine it. And that's okay. And that's probably appropriate. This is hard regulation to get right. I was on a panel earlier this morning that was largely European based, and there was a head of financial services practice at a large law firm. And he was talking about regulation in just a very sweeping sort of way. And I think that is going to be the case. But his point was, we've got decades, centuries of thought processes and prisms through which regulators look around governing financial markets. And do they use that same prism and adopt the same principles, litmus tests, criteria, et cetera, to this marketplace? In some ways, probably because that's all they know. And I think the regulators, certainly I can speak to New York, who we're closest with, continually get more and more informed and get better and better at understanding this. But there's always going to be this tension between, do you apply the legacy framework onto the new principles and the new platform, the new marketplace, or do you really take a step back from the table and try to develop completely new policies, procedures, and frameworks through which to apply? And I think there will be a hybrid. I think there's a greater sense of urgency now, given the blowup of FTX, to do something quickly. If we had this conversation 2 months ago and you asked me what I thought about regulation, I would have said the big event in 2020 will go down, I think, as the president's executive order. We're just talking about the US.
Right.
That basically, while some said it was a big nothing burger, I think it actually was very important because it said that there's a there. And what Biden did through that executive order was to challenge the different respective regulators to start to regulate this industry. And that was, I think, a very credentializing moment for the digital asset industry, because it said there's enough to regulate. This is not a corner case anymore. Right. And there's a trickle-down impact of, well, what is it that we're regulating? What are these assets? Are they securities? Are they commodities? Are they currencies? Are they regulated? Are they unregulated? Are they something other? And so there's still very much of a tug of war going on between the regulators about who has jurisdiction. I just read something today that Gensler evidently commented yesterday that he's got all the regulatory permission he needs to regulate this industry out of the SEC. SEC regulates securities, and there's a body of belief out there that many of these assets are not securities. So if they're not securities, they're not under the rubric of the SEC. What I will tell you is,
where would that fall? Where would the industry fall if not under the SEC?
So it could fall under the CFTC as the other big regulator here if these assets will be treated as commodities. So the Commodities Futures Trading Commission, and they already do regulate a portion of this. Bitcoin and Ethereum have been deemed to be, air quotes, commodities in the past. And so if that's the case and they're commodities, it would stand to reason that the CFTC would be the appropriate regulator to have jurisdiction over them, or it could be other. I think when you take a step back and look at FTX, which is obviously getting, all the headlines, it's important to note, I think what's happened is a combination, and we've seen this before, of, in no particular order, hubris, lack of risk management, lack of regulatory oversight, fraud, greed, all in one, having nothing to do with cryptocurrency, other than that happened to be, the product or the widget that was involved. But that bad combination of really human behaviors and some structural impediments have happened before. We've seen this movie. We saw it with Madoff, we saw it with Enron, again, just sticking to the US, and neither of those brought the capital markets down. There's a crisis of confidence that happens, and there were some very positive things that resulted from Madoff, namely in just sticking in capital markets, a whole notion around transparency, reports. We used to deliver them in my prior company that essentially a proof of assets that would, from a third party, attest to the fact that Rhett actually has these assets sitting at a custodian. There was a greater scrutiny around the segregation of duties between exchanges and custodians, and not having one counterparty be your trader, your money manager, your custodian, and your reporting agent all in one, where you can have a lot of collusion and fraud. But unfortunately, all these things get heaped in, and now it's the crypto market, all over again. And we've had a couple of other black eyes this year, again, having to do with lack of regulatory oversight, greed, fraud, lack of risk management. Not all with bad actors, I don't want to say that, but there are some systemic issues and growing pains from still having a nascent industry here. And so this is a setback for sure for the industry in some ways.
That's a great segue to the question that I had next. Is I was talking to somebody this morning actually, and they're just spooked, right? And have no confidence in the market and the crypto market now. How do we get that? How do we get that back? I mean, how does that? Obviously things changed after Madoff and Enron, but how do we? How does the market kind of get confidence back that it's a safe investment?
Yeah, it's the, I think, most relevant question going on today, and I can speak to it from two different perspectives: the retail and the institutional perspective. Our business is completely institutional, so we don't support retail customers. On the retail side, I think I think there's a lot of retail trading that's really been flushed out. You look at the volumes of the exchanges right now, opening of new accounts, et cetera, and it's really, really muted right now. I think FOMO will take care of that. Once you see, and I'm not here to call, is Bitcoin nearing a bottom here? It seems to be trading pretty well amidst all this bad news. Bitcoin goes from 16, 17,000 to 27,000. You're going to see a lot more retail interest coming in. That's just market psyche. So I think time will take care of itself once you start to see prices rise. I think the more interesting and relevant conversation for our group here today is around the institutional side. And while we have some institutional clients who had been getting very ready to start to invest in the space, who have taken a step back and just said, well, we're going to really sit this one out until some structural things change. A lot of that having to do with more regulation, and a lot of it having to do with more scrutiny around the service providers that they elect to use, understanding segregation of duties, potential conflicts, background checks, all those sort of things. And that's just going to take time, I think, to heal those wounds, because there is a crisis of confidence, appropriately, I think. Mm-hmm. There are others who view this as opportunistically. They're rubbing their hands together and saying, this is great. Goldman came out 2 days ago saying, these are the times that we make prudent investments. Of course, they're going to do all their diligence, and they've got a great model, but they view downturns in markets, and there's all these adages and cliches that you've heard around, this being the time to invest, this being the time to build. If you believe in the long-term thesis around digital assets, and specifically in our world, infrastructure, this is a great place to be. Yes, we're going to have to hold our nose for a little bit longer here, because the demand curve is definitely more muted in the near term. But there will be a shakeout of less qualified providers. There will likely be some consolidation in the space. I was talking to a banker yesterday who I just know and stay in touch with, and he said there are some really big investors, strategic investors, who are looking for investments in, in some cases, depending upon your investment style, distressed assets or non-distressed assets, who will be not only the survivors, but those entities that really thrive when this market comes back. And I think there's a profound belief that it's a when, not if. We've gone too far as an industry to question that, which gets back to atomic net, right? It's not just about cryptocurrencies, but it's about this broader tokenization and digitization. You might feel like cryptocurrencies, have maybe seen their heyday and are going away, but I wouldn't want to be taking the bet that I think, if you just look at in the last, let's say, 4 months, of the large institutional investment firms that have come out and said, we are investing in this space with products. So KKR, Hamilton Lane, Wisdom Tree, BlackRock, just to name a few.
Right.
And they're investing heavily right now.
Yeah, that makes a lot of sense, and I would agree. So we're running behind, so I wanted to jump into some of the questions from the audience, Jack. How much? It says we've got a question from Nisa or Nisa. She says, "How much demand have we seen from KKR or Hamilton Lane funds?"
I don't know the answer to that. It's just not something I'm close to on that
Okay.
on that exchange. I can tell you that it got a lot of press, and I think it's a validating sort of statement that those organizations are coming in, because it gives you a lens into how they view the world around how it's really a play towards democratization of finance and how assets will ultimately be created and distributed to end investors. But I don't know how that's been going.
And Kelly KK or Kelly, she asked, will PolySign custody retail investors, and will they custody assets as well as NFTs or even DAOs? And could I use DeFi, i.e. Flare Network, or with PolySign? And will PolySign have an FTSO?
So
Lots of questions there.
Questions in there, yeah. But as I mentioned earlier, we are exclusively serving institutional investors. Our marker there is if you're a qualified investor or above. So some high net worth obviously would fit into that. As it relates to NFTs, we do have NFTs on our roadmap, as well as supporting various DeFi applications. DeFi is a really interesting whole other conversation. We're trying.
I wanted to ask you about that, but yeah.
I mean, we have a lot of our clients who have invested in DeFi, and so we are building out tools and applications and solutions to support institutions who want to come into DeFi. Right now, there's a lack of institutional grade infrastructure for DeFi, which has kept a lot of institutions out. I think that's going to change here, over the next year or two.
Okay. Well, Kareem, do we have time? Or do we need
No, I think this is an important conversation. Let's extend the time for a few more minutes of questions. I know, Rhett, you've got a bunch of questions, so please go ahead for another 5 or 6 minutes, please. Okay.
And if we have questions from the audience, please ask them. Put them in the Q&A, and we certainly want to get to those. So where were we? So we were talking about it. Let's get into the DeFi. So talk about those products and talk about what that's gonna, what you're in that sort of space. What are you?
Yeah, this is my personal view. And so for those on the call who may not know, DeFi, decentralized finance, right? So removing a counterparty, think of it as more peer-to-peer, and it could be institution to institution, where you really control the movement of your funds without going through a third party intermediary. I happen to think that for institutions coming into that space, that you will ultimately see a hybrid sort of approach. We still actually believe that trust matters, and we believe that the due diligence that institutions will do in the space would like to have a third party of some sort, ideally a regulated entity, be a participant in many, not all, but many transactions. I think the regulators are going to come into this space. And so there will be a role to play for highly regulated, focused service providers like Standard Custody in that space. That's a view that we're taking. And so if we can build applications, it could be wallet type technology, which is something that we're building, where the client may have more control than they typically do in a cold storage vault about moving the asset. And when I say more control, ultimately our clients have the control. It's their assets, they control the movement of it. But there's a process in our world that can take 3 to 5 minutes. It can take hours with our competitors. But for some of the DeFi applications, it's rapid fire in and out, high volume, high transaction amounts and high speed. And so that's difficult to do with the approval process that's currently required in our solution. And so we're thinking about how we can build a product that would still protect the customer assets, but give more authority, more control for clients to move those assets on their own. So those are the sort of things. I think at the end of the day, I got asked this question earlier today on something else, whether or not institutions would feel better about using a legacy service provider or a brand name service provider. If you can go, and you're, fill in the blank, large global asset manager and you're a big mutual fund complex, absolutely you'd rather use those sort of service providers than go peer-to-peer. Fidelity going to trade with Wellington, trade with Capital Group without an intermediary. You can imagine how the boards and the compliance and the risk management folks get great comfort by having third parties play a role. The other side and ethos kind of driven point in this market is that, trust no one. There's truth, not trust. And so I think there will ultimately emerge a hybrid sort of market structure to carry this industry into the future. So, not the most popular view around DeFi. DeFi by its definition doesn't have any third party or centralized role to play there.
But I think that's a reasonable view of the next few years, yeah. Right?
I will also add, for those interested, if you look at the black eyes that we've seen in the industry today, just year to date, DeFi has stood up unbelievably well. DeFi has done what it was supposed to do. We have not had the problems because everything lives on chain there. And, it is truth over trust and it's working. So I think there's a lot of promise. I'm long DeFi for sure. And I think some of the financial products that are being developed there, a lot of the ecosystem, the smart contract based work is really, really powerful and will have a permanent role to play in capital markets as we know it going forward.
Agreed. And I did get we got a question from Mark, and he asked, will PolySign's customer list extend to both corporate and government entities?
We are talking right now to a number of corporates, and we're just beginning a potential proof of concept, and we hope to be able to announce it in January around a central bank digital currency pilot program, which is really exciting, that leverages a lot of what we're building around AtomicNet.
That is exciting, actually. That's any more you can say about that? That's actually fascinating. No,
we'll reconvene in a few months on that one.
Okay, darn it, couldn't get you to bite on that. We got another question from Dean. He asked, will PolySign support Flare token holders with wrapping and delegation votes to FTSOs?
Not something that is on our current roadmap, which isn't to say it won't. It's just we've got a lot on our plate right now, and that's not currently on the list.
Okay, we're getting a lot of questions coming in. I appreciate that. Mark actually follows up and says, he asks CBDC.
Yeah, central bank digital currencies. I mean,
yes.
Obviously that there's a lot of movement. I think it started with
right. That's right. That's what
some of the emerging countries that have systemic issues around inflation and currency issues, and CBDCs could represent, together with stable coins, a really interesting evolution of how sovereigns manage their currencies. And obviously it's becoming more widespread into developed first world countries as well. And so I think you're going to see a lot of development in this space. More and more sovereigns are launching pilot programs. So we expect to be involved there for sure.
And one last one before Kareem intervenes here is Patricia asks, are global usages of PolySign applications developing simultaneously? I
think the question, so the answer is yes. I mean, in the different businesses, we've just talked about AtomicNet.
Right.
In the case of the fund administration business, MG Stover, we have a number of clients outside the US. It's largely a US client base there. And on standard custody, we have, I would say 70% of our clients are in the US, but growing. And we very much view particularly the custody market as a global marketplace. And we are always looking to, we've got a whole initiative right now, understanding a lot of the foreign jurisdictions of where we can and can't do business. We've got clients in the UAE, we've got clients in Hong Kong, we've got clients in Jersey Islands and Luxembourg, I think in Switzerland. So that part of our business, I think, will continue to grow.
Thanks. Thank you.
Thank you, Rhett.
So, Rhett, thank you. Jack, thank you. We've still got so many questions and then they keep flowing in, but unfortunately, we do have to wrap this up. I'd like a response from the audience here quickly. Do we want to see Jack back in Q1 of 2023 so that I can answer all of these questions? Do we want him back? Look, I've only got 4 yeses so far. I want to see about 50. If we get a vote of 50 people saying we want to see Jack back, can you say yes, Jack?
That's great. Got to
Kareem,
tell
we
my.
got a bunch more questions, man. We can't get a little more time. We got like
I wish my kids were as responsive and supportive as the audience here.
We do have to be cognizant. We've got some international speakers now coming in, talking a little bit more about how they're developing companies and products on the Ripple infrastructure, RippleNet, and XRPL on Ledger. So we do have to transition. It looks like, Jack, we're at about 40 yeses to see you back. We'll connect with Megan and you to schedule your calendar for a link to learn in January and have you back. So thank you so much for your time.
Happy to progress. Do it. Yeah. Appreciate the questions and Rhett's time as well.
Thank you, guys.
Thank you, Rhett. That's been amazing. Sorry you couldn't get the sound bites you wanted, but I know everyone's a little bit under a time pressure. And Jack will have more to share in Q1 after his meeting today, which will be illuminating and fascinating for sure.
Great. Happy holidays, everyone. Thank you.
Thank you. Thank you. So we are saying goodbye to Rhett and Jack.